stocks had every reason to fall, but they moved higher instead. That was the surprise on Monday, with the Iran conflict entering its 7th week and the Strait of Hormuz back in focus. This looked like the kind of day that should have pushed investors deeper into fear. Instead, the market leaned toward the idea that talks could still move forward, and that was enough to keep stocks rising. The tone improved after President Trump said Iran had reached out first and was eager to make a deal. Reports also said mediators like Pakistan, Egypt, and Turkey may keep working with both sides over the next few days. The Trump administration was also said to be reviewing a second round of direct talks. So the market did not trade like it was bracing for the worst. It traded more like it was looking for a path toward de-escalation. That helped lift stocks through the session. The S&P 500 rose 1% and moved back into positive territory for the year. Technology stocks helped lead the move, with Microsoft and Oracle supporting the broader rally. SanDisk also jumped after news that it would join the Nasdaq 100. What stood out was not just that stocks rose, but how calmly the market handled the pressure. Mark Lucchini of Janney Montgomery Scott said the market seems to be getting more numb as negotiations keep moving forward and then breaking down again. Mark Hackett of Nationwide said the weak reaction to bad headlines suggests investors are getting tired of the conflict and shifting their focus back toward fundamentals and earnings. There were still softer spots. Airline stocks fell as higher oil prices created pressure, and Goldman Sachs slipped after weakness in fixed income, currency, and commodities offset strength in stock trading. So this was not a perfect broad risk-on rally. But the bigger tone still looked constructive. That matters because if earnings stay firm, the market may keep finding support even while geopolitical headlines stay noisy. Clark Bellin of Bellwether Wealth said stock prices are traditionally driven by earnings, and this season could test whether stocks can break away from oil-related pressure. Mike Wilson of Morgan Stanley also said a strong earnings backdrop is helping prevent further downside in the S&P 500. Now the next test comes on Tuesday. Investors will watch the March PPI report, the NFIB Small Business Optimism Index, comments from Fed officials, and earnings from BlackRock, Johnson & Johnson, JP Morgan, CarMax, and Citigroup. Don't forget to like and subscribe for more daily market recaps. This is Wilson.